Smooth 98.1. This is a Business Express. We're talking about everything related to money, finance, business, and of course, the economy. We have a special guest joining us this morning, but I'll let you know how you can be a part of the show. The WhatsApp number to send your messages to is 0809 440 And you can also tweet at Smooth981 as well. We're streaming live on our YouTube channel. You can catch the live stream on our channel, Smooth981. You can even post a comment underneath that live stream. And don't forget to subscribe. This morning, we're talking about GTCO exploring a public offer. Our special guest is Gbeminiyi Shopeju. She's an analyst in investment research and portfolio management with Zedcrest Wealth. Good morning, Gbeminiyi, and welcome to Business Express.
Hi, good morning. Thank you for having me.
All right, so this is not or has not been confirmed by the
Yeah.
bank yet. Okay, but still though, what is a public offer?
Okay, so basically a public offer is when a company sells ownership, is selling ownership of the company, like some more ownership of the company, or basically borrowing money from general public, right? So in the context of banks, a public offer means the bank selling new shares of ownerships like stocks or borrowing money through bonds directly to the general public. And they use this cash injection to grow their business, fund projects, or even pay off debt.
All right, thanks for that. So, it's a back to school morning here on Business Express. So, I'd like you to sort of explain the dilutive and non-dilutive approach when it comes to raising capital for a publicly traded company.
Okay, great. So public offerings can either be dilutive or non-dilutive, right? A dilutive offering basically means the bank issuing new shares of stock. So that means it will increase the total number of shares that the bank has currently, right? And this can directly affect earnings per share. So it directly affects the existing shareholders. On the other hand, the non-dilutive offering doesn't involve new shares, and the bank might raise capital through debt financing, using its existing profits, or even selling assets. And this way, the shareholders' ownership and earnings per share remain unaffected.
Okay. Now we understand that the devaluation of the currency has impacted the bank's single obligor limits. Can you explain what that is?
Okay. So banks have a limit on how much they can lend to a single borrower, called the single obligor limit. And this basically considers all the bank's commitments, including loans, guarantees, and even foreign currency exposures. And recently, we've seen the currency devalue, right? So this would likely increase the bank's loan book. So in terms of their foreign currency exposures, and in order to meet up with these obligations, some banks like GT Bank would need to strengthen their capital base, which is what they're trying to do. Room.
All right, we are speaking with Gbeminiyi Shopeju. She's an analyst, investment research and portfolio management, Zedcrest Wealth. And we're talking about this news that's making the rounds, possibly of GTCO exploring a public offer. Now, if GTB, which is one of the, well, best run banks in Nigeria, is seeking a public offer, according to the sources, though, what does that say for the rest of the sector, the banking sector in Nigeria?
Okay, so the impact of all these recent developments will vary by bank, right? So depending on their foreign currency loans exposure, like we've spoken about before, and their capital reserves. So it's not really about how well these banks are run, right? But rather their financial exposures, foreign currency exposures. And these align basically with the CBN governor's focus on recapitalization. So we could expect more banks to strengthen their positions through public offers, mergers, and acquisitions.
You're listening to Business Express on Smooth 98.1. Do stay with us. The show continues shortly.
Thank you.
Bimini?
Yes, I'm here.
Okay, I'm gonna send you a message right now.
Okay. Okay.
All right.
And I saw you vow to transcend you with lyrical breeze. Lift you in flowers you flow through. My music is frequency that I take. Not music, not loud. You're listening to my ears.
All right, we're going back on.
Okay.
Smooth 98.1. This is Business Express. It's Zibby here, and I've got a guest joining me this morning. Our guest is Gbeminiyi. Gbeminiyi is an analyst, Gbeminiyi Shopeju analyst, investment research and portfolio management, Zedcrest Wealth. We're talking about sources saying GTCO is planning or exploring the possibilities of a public offer. Just before we took that breather at Gbeminiyi, we did speak about GTV and the rest of the banking sector. Now, let's talk about the banking index on the stock exchange. It's been down so far this year. What can you attribute that to?
Okay, so we've noticed, like you said, some ups and downs in the banking sector as of late, right? And this is partly due to the CBN's policy. So we've seen the CBN come out with a slurry of policies. We've seen the net open position policy. We've seen the CRR being increased drastically. We've seen um, the CBN go from discretionary CRR to like a more structured method of CRR taking, right? So all of this plus overall market sentiment have been pulling down the banking index. But the good news is that the core business of our banks are still going strong, right? And we are keeping a positive outlook as we expect the sector to rally in the coming months based off of news like mergers, acquisitions, things like this would make the sector rally and would push the banking sector index up.
So, in your opinion, should one still purchase banking stocks or, just maybe sit by, give them a little bit more time to recover? What would you recommend?
Okay, so this question, I would say it largely depends on investor risk appetite, right? So some people have high risk, some people have low risk tolerance, and whether the investor has a long-term or short-term investment view also matters, or whether the investor is looking for capital appreciation or dividend income also matters. But I believe that the banking tickers are still strong and they they will still remain strong in the coming months.
All right. Let us know your thoughts or questions if you have any. The WhatsApp number is 0809 440 981. You can also tweet at Smooth981. We're streaming live on our YouTube channel as well, so you can catch that live stream and post a comment. It's Smooth981. I've got a message coming through, and this one is from Tayo. Tayo says, GTCO seeking public offer. According to sources, they haven't confirmed this yet. Everybody needs a lending hand. I hope it's beneficial for on takers, unlike some other companies, some other telcos. Fine, Oluboroko says, though banks are having a good run right now, however, there's need for them to recapitalize to put them in the best position to serve their customers, and this will put them in the same levels with banks in other climes. Gbeminiyi, is it possible, though, that there could be more banks losing to raise capital in the future?
Okay, so definitely, yes. We believe that in that more of this will come in terms of public offers like this that is rumored to happen and mergers and acquisitions that will come. So we'll have more banks come together, like join forces in that sense. And then, like we said, this will make the index rally. So the banking sector, we have a strong, we believe that the banking sector tickers remain strong.
Okay. What is your outlook for the banking sector in Nigeria? from this point here on?
Okay. So generally, we have a positive outlook for banking tickers. And like we've said, we believe the possibility of public offers, mergers, and acquisitions will boost rally in the sector. Also, there are currently elevated fixed income yields in the market, and these are positive news for banks because they have investments in fixed income markets.
Okay. Well, let's see if we've got some more messages coming through. Yes, we do. You can keep them coming. WhatsApp number 0809 444 0981. Gilbert Musa from Festac says, on public offer by GTCO, I see it being oversubscribed for in the long term, considering GTCO's history in 1997, being the first bank in Nigeria to meet the then 500 million naira recapitalization directive given to all banks by the CBN. However, other bank brands will need to work hard on convincing the public to subscribe to their IPO, considering the market crisis incidents of 2008 in Nigeria, where share values crashed. All right. Thank you, Gilbert. Always a walk back in time with Gilbert and reeling the facts from years before. Well, that is all the time that we have for Business Express this morning. Thank you for listening. And special thanks to Gbeminiyi, Shopeju. Gbeminiyi is an analyst, investment research, and portfolio management. Zedcrest. Well, thank you so much, Gbeminiyi, for being on
Thank
Business
you.
Express this morning.
Thank you too. Have a lovely day.
Thank you. And that is it for Business Express. You can, of course, stay with us because there is a lot more to come on the Smooth Breakfast.